You actually don't need to stress about too much. It is 5 o'clock, so I expect everybody to have an alcoholic beverage because it's really the only way you can deal with any of these government stimuluses, and hopefully some yummy cheese and bickies or some leftover chocolate Easter eggs would be quite nice. Type your questions in the Q&A box, which is in the middle of the screen down the bottom, or if you'd like to share what you're drinking or eating, try the chat box. If the wind gets too much for you, because obviously I am in Western Australia at a farm.
Olive.
A farm with lots of olive trees, then let me know and we'll try and mute me or do something. But welcome to bird life and welcome to our current living situation, which takes working from home to a completely different level.
Amen.
Whilst Alan gets the entire office to himself as everybody else is working from home.
It is great.
All right, so we've got a couple of other questions that people have actually asked over the last few days, and I'm going to start basically just going through them in groups of all of the different stuff that has actually been announced, because despite the fact that we've literally only had a month worth of announcements, there is so many new things that businesses are going to qualify for, and somehow I doubt that any of these announcements are the last announcements that we are going to see. If only. So I wanted to start with a question that we've been getting asked a lot about the boosting cash flow for employers. So this was the first thing that the government announced, and it was based around if you have any employees in your business, then you were going to get a minimum of 10 grand in this period. So between March business activity statement and the June business activity statements, and for those of you monthly, March, April, May and June, up to a maximum of $50,000. And everybody keeps asking the question of, I thought this was $20,000 and a maximum of $100,000. And the answer is, that is correct. They're just being paid in two distinctive tranches. So March to June is kind of one payment period. And then they're doing exactly the same thing again for July to October, which means if you're getting 10 grand now, you're going to get 10 grand again between July and October. If you're getting 50 grand now, you're getting 50 grand again in July to October, or whatever the in-between amount is. So it isn't $20,000 now and then $100,000 now. It's based on the pay-as-you-go that you're physically paying to your employees. And yes, employees can be you if you're already on the payroll. So it basically is whatever you've done in your March quarter BAS. Now we're just over halfway through everybody's BASs at the moment, so you'll all be receiving your emails with exactly what that entitlement is. And then that will continue on to your June BAS, and then you get the same amount for July to October. So really simple. If you are a quarterly business activity statement person, i.e. you pay your pay-as-you-go every quarter, and you have withheld $20,000 worth of pay-as-you-go withholding, so tax, from your employers between the 1st of January and the 31st of March, you're going to get 20 grand as a rebate off this BAS. All right, so that's your first part. Let's assume that you do exactly the same between April and June for the June BAS. You'll get another 20 grand off that June BAS. Then between July and October, you're going to get those payments again. So it's 40 grand in total. So 20 grand for the first quarter, 20 grand for the second quarter. That means that you'll then get the same thing for the next quarter, paid 50% in July, so another $20,000, and 50% in October, so another $20,000. So 80 grand all up, but you'll get the money in April for the March BAS, 2 lots in July, so you get the June BAS amount plus 50% of the second tranche, and then another $20,000 in October. So that's probably going to confuse everyone. So after this, we're going to send out a little table of when you should actually expect those payments. Because if you're a monthly payer, so you normally have to pay your pay-as-you-go withholding every single month, then you're obviously going to get 3 times your March amount that you have to pay, because you've already dealt with January and February, and it'd be unfair if you only got March. Then you'll get the same for April, for May, and for June until you hit the $50,000. And your second tranche of payments is going to be 25% of what you got in the first tranche. So in that example, if it was $40,000, you get $10,000 in July, $10,000 in August, $10,000 in September, and $10,000 in October. So just a little bit of confusion with a few people around when you're actually going to get those payments. So boosting cash flow for employers is actually happening right now. The other question that we keep getting around that is, will I get the actual payment? So am I physically going to get that money if I have an ATO debt? And at the moment, that answer is no. It will offset your ATO debt to start with, even your prior, not just these BASs. And then any amount over and above that would be refunded. So that will be awesome. All right. So, Alan, let's start to go through a couple of these other questions that are in there. We're going to do JobKeeper last, just because I imagine there's going to be a lot of people having JobKeeper questions, and we can group all of those things together, but then I'll run through pretty much everything else that we have.
Yeah, sure. Listen, the first question, which I've just answered, which was just a basic one, is yes, we actually are recording this, so we can send a copy of this through to you after tonight's presentation, so you don't need to worry about that too much. And as Steph said, we're also sending you through some updated information and tables for you guys to look at and apply to your businesses over the next couple of weeks. The first lot of questions we've had are actually about rent reductions and how people are going about paying less rent to their landlords. So the first question is, I can't actually afford to pay the rent at the moment due to paying the JobKeeper. Is this acceptable? And for what period of time is it okay not to pay the rent?
So the technical answer to that is no, that's not acceptable. However, last week the PM announced a new national commercial tenancy code that they were trying to actually have enforced. But the problem with that is the state governments are the ones who effectively need to enforce this legislation. So basically, the idea behind this was that if your business had suffered a reduction in turnover, then your landlord had to, and mind you, this is going to be the law, it looks like it's going to be passed, your landlord actually needs to reduce your rent down. So that's just set in stone. If you actually have a reduction in your turnover, then your landlord needs to give you a reduction in rent, and that needs to be based on your reduction in turnover. So let's assume you had a business you were operating from, and that business was forced to shut via government direction, and your income went from, let's just say, $100,000 down to nil, and you also, that's in a month, and you also were paying $100,000 worth of rent in a year. We'll just make my maths really, really simple. So you need to prove to your landlord, and I need to note there that the guidelines on how you prove to your landlord a reduction in rent still haven't been released. At this stage, your landlord is well within their rights to request a copy of your profit and loss statement, all right? So you have to be able to show to your landlord, and your landlord has to be able to effectively audit that information. so that you can prove a reduction in your income. If you went from 100 to nothing for a month in income, you had zero income whatsoever, then that's a 100% reduction of income, and your landlord needs to offer you a 100% rent reduction. Now, that's in 2 tranches though. Whatever rent you are paying, if you've gone 100% reduction, your landlord has to cut your rental payments by 50%. So whatever it is, 50% of your reduction needs to be a complete reduction in rent from your landlord. So that will be 0. In my $10,000 per month rent, say that I'm paying my landlord, I wouldn't have to pay $5,000 rent, and that wouldn't get added to my bill at the end. It wouldn't be a deferment of rent for 3 months. That is a complete and utter wipeout of rent. So no rent payable. 50% of your reduction in turnover is basically what's happening with that. Now, the other 50% can either be added to the end of your lease. So let's say hypothetically, for 2 months your business was closed and it was $10,000 per month in rent. Then $5,000 of that you wouldn't pay at all, and the other $5,000 multiplied by 2 months could be added to the end of your lease, or it can be amortized, i.e. written off over a period of a minimum of 24 months. So that's something that you need to negotiate with your landlord, whether it gets written off over the minimum of 24 months or gets added to the end of your lease. But the landlord has to, according to this National Code of Conduct, end up doing 50% as a no rent and 50% as an actual addition or amortization to the rest of your lease. Now that's really simple if you've gone from having income to having no income. If you have actually just decreased your income by 50% as an example, so not the full 100%, it's just dropped by 50%, and you're paying $10,000 normally, then your landlord would have to give you $2,500 rent free. So that's your turnover has reduced by 50%. Therefore, your rent should be $5,000 in this example. 50% of that $5,000 is complete rent free. 50% of that $5,000 then gets amortized over 24 months or added to the end of your lease. So the key here is, first of all, you must qualify for JobKeeper. So you must be eligible for JobKeeper. Eligibility, obviously, less than or a decline of at least 30% in your turnover. So if a business has not had a minimum of 30% decline in turnover and therefore qualifies for JobKeeper, these rules do not apply. Just full stop, they don't apply. If the business does qualify for JobKeeper, then it is a discussion with the landlord to prove that you've actually had the percentage decrease in your turnover, and then 50% of that decrease rent-free, 50% added on to the end. Now we'll see a lot more coming out in the next, I'd say, couple of weeks as all of this keeps going on and on for rent, because as I said, it's actually just a national code of conduct at the moment that will be legislated by all of the states.
Yep, good point. I think one of the other questions here is, does the landlord have any grounds to refuse?
No, once it's law, no, they can't. The other, I guess, good thing for protecting certainly small business owners is landlords can't kick tenants out for the next 6 months. We've had a lot of questions from landlords as well about, well, how do they continue to pay for their costs and everything else? And it's really important to note that as a landlord, the business that is there, you want for them hopefully to be there at the end of this. So you need to actually come to the party. It is now law and legislation. But the other thing is you actually do need to ensure that the business has had a reduction in turnover. So I know a lot of the big landlords, so like the likes of Fortius as an example, you need to provide them with audited sales figures every single year normally, to prove what your turnover is, for them then to increase all of their marketing subscription costs and have whatever that ends up being. And they're going to do exactly the same thing again. So that is providing your sales figures, providing your profit and loss statements to actually show that your turnover has decreased. So we will get more and more guidance out about that. But at the moment, landlords are well within their rights for asking for your profit and loss statements to show that downturn.
Beautiful. We have a hell of a lot of questions about JobKeeper, but we might touch on that later on in the discussion, I think, just to keep things moving quickly. Steph, did you want to start talking about the apprenticeships and the subsidies about that?
All right. So a great thing to keep your apprentices, I guess, engaged in the business is that 50% of your apprentices' wages are basically going to be paid for the period 1st of January to the 30th of September. That will look like your apprenticeship provider sending you out documentation, and nearly all of the apprenticeship providers have now sent out that documentation for the first quarter, being the 1st of January to the 31st of March. You need to then complete that documentation, send it back to the apprenticeship provider, and that documentation is effectively pay slips for your employees for that quarter, and or a payroll summary report from Xero that basically shows all of the wages that you've paid. That will then be paid by the apprenticeship provider every single quarter to a maximum of $7,000 per apprentice per quarter. And it's important to note that you can't qualify for that if you have more than 20 full-time employees. So you don't have to register for JobKeeper, you don't have to be in any of those things for the apprenticeship subsidy, but you do need to make sure that you don't have more than 20 employees, basically. So what everybody's had to do for this first quarter, we are basically going to have to do for the June quarter and the September quarter again. And then those payments will end up being made. Now, at the moment, a few of the apprenticeship providers have actually cottoned on that some people will be eligible for JobKeeper, and therefore their apprentices, they'll be getting paid basically under the JobKeeper rules. So we're still waiting final legislation at the moment. Anyone who is eligible for JobKeeper, you won't be able to double dip and get the 50% of their apprenticeship wages paid as well. Damn it. But we still don't have the final, I guess, rulings or guidelines on that. So obviously has no implications for the first quarter to the end of March, but we'll definitely see that coming through for the next quarter, in which case we'll need to make sure all of the apprenticeship bodies have the correct information for you for those quarters as well.
Excellent. I can't see anyone. Does anyone have any questions about the apprentices before we move on to the big JobKeeper round of questions? Just click on that Q&A box and ask your question, and we'll start answering that for you now. If not, we might start moving on to JobKeeper.
And yeah, it is quite funny, before we go there, Alan, with the rental and the landlord issue, a lot of people are actually their own landlord in another entity. So I look forward to facilitating the conversation that you're going to have with yourself about the rent reduction for your business. This is the grey area at the moment, because for a lot of you who have self-managed super funds who own the business premises, as an example, you don't want to necessarily reduce that rent if you still have enough cash flow. So there have been quite a few applications done where If it's a related party and the related party agrees, we're trying to see if that can be excluded from this tenancy code, because that's obviously something that people don't actually need to sit down with themselves.
Good old meeting, have a good hard talking to. We've got some questions coming through now for the apprentices. One person's asked, does that mean that the first quarter will be available for apprentices, and then if they qualify for JobKeeper, no more apprentice incentive payments made?
So no, they'll apply for the first quarter. They'll get that payment for the first quarter. If for the second quarter, as an example, for that whole entire time period, they were on JobKeeper, then they definitely won't get any more apprentice payments. But if they went back, also if they went off JobKeeper, as an example, for the last quarter, being July to September, they will again have those apprentice payments made. So effectively, we're still going to have to report to the apprenticeship board every single quarter, but we'll have to report the payments that we've received JobKeeper allowances for and the payments that we haven't received JobKeeper allowance for. They'll pay you for the ones that you haven't. They won't pay you for the ones that they have, and we'll still have to do all of the reporting, whether we like it or not, because we love reporting.
I've got a couple of questions that I think is the one question coming in. Does it matter if you have registered with the apprenticeship provider, but JobKeeper would work out better? And the example is getting paid $700 a week, only getting $350 from the apprenticeship provider, but on JobKeeper they would get $750.
Yeah, so JobKeeper will win in that scenario, and you don't get a choice. If you're eligible for JobKeeper and you elect to go into the JobKeeper program, then every single employee that you have has to be included in JobKeeper as long as they're eligible, right? So as long as they are permanent, be that full-time or part-time or a casual that's been there for longer than 12 months, your apprentices should actually be, in theory, permanent employees. So they will need to be paid under JobKeeper, assuming you're eligible, in which case you're going to be reporting to the apprenticeship board that you've already received payments, and they won't pay you for those fortnights that you've actually received those payments for.
Excellent. Let's have a look.
So let's do the landlord ones that are in here as well. So is there any support? Yeah, go.
Is there any support for the landlord who has to give the business a rent decrease?
At the moment, no. So the only support is that the banks are freezing rental payments at the moment. So obviously, if your bank has been nice to say you don't need to pay your loan repayments for the next 3 months or 6 months, depending on what bank it is, then you're getting I guess, an extension of time to pay. But at the moment, there is nothing for landlords. It is important to note, though, that obviously this is going to have a massive impact, a massive impact on personal tax returns as well. So be that personal if you own the property in your personal name, or if you own it in a trust or a partnership or a super fund, that's rent that you're not going to get. And so we need to be really mindful of building that into our tax planning calculations for you for the year, because if you ordinarily have a negatively geared property, that potentially is going to be a much larger negatively geared property.
Yeah. I've got another question here. If you are a landlord, can you request to have the tenant prove their percentage loss on a monthly basis in case they start trading again?
Most definitely. So this is not a set and forget. This is basically the tenant will need to show you on a monthly basis their actual reduction in turnover, and you will apply that rent component, the 50% either reduction, as in decline, nothing to pay, and the 50% amortized over the rest. It is a month-by-month basis. It's not permanent. It's not for 6 months. It is literally on a month-by-month basis. And remember, they still need to be eligible for JobKeeper.
Excellent. I've had one more question about apprentices that says, what about school-based apprentices?
The same thing applies, school-based apprentices or an actual apprenticeship that is, working full-time, as long as they are actually registered with an apprenticeship body. And remember, these are the guys who are facilitating this. So they're the ones that you need to be in contact with about whether that apprentice qualifies or not. And everyone so far has actually had their apprenticeship providers send them a list of who qualifies. So if you haven't got that from your apprenticeship provider, you need to be reaching out to them right now to say, where is it?
Excellent.
Now, does anyone else have any non-job keeper questions before
we attack the list? There's a few.
All right, just really quickly before we get to JobKeeper, because a lot of people, I guess, probably haven't looked at the rest of the legislation. There's two things that aren't cash payments, but are beneficial for businesses. The first is the instant asset write-off, and the second is some weird thing that they've called accelerating depreciation. The fancy names are just amazing, what the government come up with some of these things. So the first part is, if you buy an asset, so let's just say you buy a truck, you're an electrical business, and you buy a truck today on the 14th of April, you drive it out of the showroom, so it's ready to go today, and it costs you $50,000 excluding GST. You are now going to be able to claim that entire 50 grand as a tax deduction in this financial year. So right now for this 2020 financial year. So this is not cash from the ATO. This is them not giving you anything at all. It just means that you get to write off that asset that you have purchased, as long as it's less than $150,000. Yes, free trucks for everyone, not quite. But you get to claim that as a tax deduction in this year. So basically, if I've spent 50 grand on something, I'm going to save $13,750 in tax, assuming I'm a small business company paying 27.5 cents in the dollar. There's my little disclaimer. But you have to be making a profit, right, to pay tax. So if your business is seeing a decline, then this is probably not something that you are even going to want to consider doing. So the rules are that between the 1st of July 2019 and the 11th of March 2020, just because we like to make things confusing here, anything that you've purchased that is less than $30,000, you get to write off immediately, i.e. claim as a tax deduction immediately. Anything purchased between the 12th of March 2020 and the 30th of June 2020 that costs $150,000 or less, you get to claim as a tax deduction in this year. So post the 1st of July 2020, unless we get to the budget in October and they change all of the rules again, but after the 1st of July 2020, then you only get to claim something as a tax deduction and write it off completely in one go if it's less than $1,000. Now, I don't know about you, but I don't know anything that's an asset that costs less than $1,000 anymore. So basically, we go back to the old rules of a couple of years ago that you have to depreciate, so claim over a number of years, the cost of an asset. So for those of you who are still working as normal and already had things in the pipeline that you were going to spend money on, so equipment, machinery that needed upgrading now, this is certainly something to consider, assuming, yes, you're making profit and therefore you're going to pay tax. And most importantly, that you have this little thing called cash to pay for it. All right, really important. Now, to make matters just a little bit more complicated, we also have this brand new thing called accelerating depreciation, and it goes from the 12th of March 2020 until the 30th of June 2021, just to make things more confusing. What that basically means is, let's assume that I purchased a still to make hand sanitizer. or gin if you're Alan's friend. And that still cost me $250,000 excluding GST. And that still is ready for me to start production tomorrow. Normally, what I would have to do in business is I would claim 15% of that still now as a tax deduction in this year, and then I would claim 30% of the balance in every year thereafter, assuming that I had pulled it, or I would just claim what I was allowed to. But with this new rule, 50% of the cost of an asset that you purchase between now and 30 June 2021, you get to claim as a tax deduction upfront. So that's 50% of the cost. So again, if my steel costs $250,000, then I get to claim $125,000 as a tax deduction when I purchase it and it's ready to go. And then the other 50% I would claim normally over that period of time. So we do have another year. So the $150,000 threshold of claiming 100% upfront, you get to the 30 June 2020. But this rule of getting to claim 50% of the cost of the asset, you get to do basically all the way to 30 June 2021. So it's just a case of making sure that we have planned your cash flow accordingly, and that therefore we have planned your tax bills accordingly as well.
Yes, very important to plan the tax bills. Okay, are you ready for the big one?
Can I say no?
All right, well, I can ask you a couple more questions. We've got a couple of more just on the apprentices. If you have registered an apprentice on JobKeeper and not paying them the $750 gross because you're not sure if the business will get to the 30% downturn, can you pay them the difference if you then happen to meet the 30% later on?
Yes, the answer is yes, but we need to be basically doing all of our JobKeeper stuff within the next 2 weeks. So we may as well go to JobKeeper, Alan, unless there's anything else that is non-JobKeeper related. Oh, we got a rent question.
We've got a rent one and we've got one other apprentice one. So stick on apprentices. Are school-based apprentices classified as part-time or casual?
It'll depend on that depends on your employment contract, and that depends on the contract that you've actually got with the apprenticeship board. So you need to go straight back to them for that.
Yeah. And then the rent one. So a quick question about rents. What if your lease ends within the 6 months? For example, this person's ends on the 31st of May and no new lease has been negotiated. How can we then amortise over 24 months if the lease has ended?
I think that's the number one question that's been asked on our accountant forums for this National Code of Conduct, because like JobKeeper, there are so many holes in this legislation because they've tried to get it out so quickly that it is very entertaining. So there is no technical answer for this at that present point in time. Landlords are being encouraged to extend the periods of a lease for people in a normal circumstance. So even if you have a 20-month to go on your lease, as an example, then the explanatory guidelines are saying to landlords, you should be extending that lease for another 4 months at least to try and get you to that 24-month period. Now, technically, as the code has been written now, your landlord can basically say to you, we're not renegotiating your lease. And unfortunately, there's pretty much nothing that they can do, or nothing that you can do. Obviously, that's quite a large problem for them, because I'm not sure who in this present point in time is going to be signing a new lease. That might actually be a good opportunity for you to go and look for some other additional space as a potential. So you're not actually paying that same amount. Or it is a case of renegotiating with your landlord another 2-year lease at those favourable terms where you can kind of keep going.
Okay, and one more question on accelerated depreciation, is a motor vehicle applicable for the accelerated method?
It is. Any assets whatsoever are definitely part of or form part of both the instant asset write-off and then the acceleration method, assuming if you don't qualify for the instant asset write-off.
Excellent.
Remember, with motor vehicles though, if it's not a truck and it's actually a motor vehicle, then you still have to make sure that you're using depreciation only up to the luxury car tax limit. And I don't know what that is at the moment because it's got a lot of numbers on the end. 50 something, 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 something.
Let's just keep them round numbers, I think. Much
Close
easier.
to $60,000. So is basically what we're up to. All right. Now, I hope everybody has their alcohol ready. Because Alan and I have pretty much been drinking permanently for the last couple of weeks as we read and wade through the JobKeeper legislation. And we thought we were 100% ready to go to talk to you about JobKeeper this afternoon. And then less than an hour before we pressed go on this webinar, the ATO brought out another new set of rules and guidelines.
Yay. Love my job. I love my job. I love my job. I love my job. I love my job.
How exciting. So I'm going to do a really quick summary of JobKeeper and then we're going to go to some of these additional questions. So basically, JobKeeper is purely designed to keep people out of the Centrelink line. If I can say it like that, it is literally a business doing the job of Centrelink so that employees are kept employed by the business rather than going to Centrelink. And there'll be a whole host of different scenarios for people with JobKeeper payments. Some people, the business has 100% shut down and the employees had ordinarily been stood down, which means not doing any work. Now, those employees can be reinstated and can be eligible for JobKeeper. So first of all, I guess let's probably talk about eligibility for an employee. First of all, everybody here has less than $1 billion of income. So congratulations. We don't deal with any clients who've got more than $1 billion in income.
Yay.
For the year. So check, you've done the first component of the eligibility criteria for JobKeeper. And that then means that you only need to be looking at a decline in turnover of 30%. Now, this has probably been the biggest question that we personally have been asking Treasury, our industry bodies and the ATO. And Treasury and the ATO still don't have every scenario covered. So as of today, in order to prove a downturn of 30% in your business, we can do one of 18 different things. Yes, you heard me right. 18 different calculations to determine a downturn. Then, if you don't meet one of those 18 different tests, we could still apply to the commissioner because you don't fit in the box that they've actually portrayed. So I'm being a bit flippant. There's not really 18 in total, but there are actually 18 different periods that we can compare against one another to look at that downturn. So we could look at your March 2019 invoices that you have sent out, or patient income that you have sent invoices for, and compare that to your March 2020 income that you've invoiced for. If you've seen a decrease of 30% from March 2019 for 1 month only compared to March 2020 for 1 month only, tick, you meet the eligibility criteria. We could also have a look at the cash that you have collected in March. So remember, normally all small businesses have to report tax on an accruals basis, which is invoices that you've sent out to people, even if you haven't been paid for them. So this is how we get to 18 different comparisons. So I could compare the cash that I received in March 2019 with the cash that I received in March 2020. And if I meet that decline in turnover test, tick, I'm now eligible for the first component of JobKeeper. I could look at my April 19 versus April 20, and then you're going to be able to do that for May, June, July, August, September. So I could look at any of those months, and I could look at those months on a cash basis, so cash that I physically received, or I could look at that on an accruals basis, so invoices that I've actually sent out. I could also have a look at my April to June quarter for last year versus what my projection is for April to June this quarter. Or I could look at my July to September last year versus my July to September this year. So what a wild number of scenarios that you're actually going to be able to look at in order to determine if you qualify and or when you qualify. So there will be quite a few people who haven't had a 30% decrease in turnover for March, have shut the doors on their business in April, so could easily prove that April might be a 30% in turnover. So we would register from the beginning of April because that is within this time period. But there'll also be a lot of people whose businesses are not actually impacted until, say, July or August, as an example. And we will still be able to do those registrations in July and August for those people as well. Now, you obviously are not going to get paid then all the way back to April. That's not how this works. But as soon as you qualify from an eligibility standpoint, as in your turnover has had that reduction, then yes, you'll be eligible. So part of this scenario in terms of cash versus accrual and all of the different methods is only brand new. So the Treasury guidelines are only out in the last 24 hours. So we'll be going back through everybody's eligibility criteria again. For those of you who we've already said tick, March is done, you've already qualified. We don't need to do anything else yet because we physically can't do anything else yet because the ATO is not even ready for us. So yeah. We'll get to that in a second. The other eligibility is that your employees must have been employees of yours on the 1st of March 2020. So if you employed somebody now, as an example, even if you employed them on a full-time basis or a part-time basis, they are ineligible, full stop. They had to be an employee on the 1st of March. They also had to be a full-time employee or a part-time employee at the 1st of March, or they had to be a casual who had already been employed by you for a period of 12 months. Now, this is the part where the ATO have been very, very clear that if you try and backdate somebody's start date, i.e. to before the 1st of March, they will come down on you like a ton of bricks. So there is an explanatory memorandum out that actually puts in there, if you deliberately defraud the government, and obviously there are tiers of this, so there are 6 tiers on their explanatory memorandum, that if you're deliberately backdating employees, etc., you could go to jail. I highly doubt they're going to do that, by the way, but that is one of their 6 steps. So the other thing for people to be mindful of is everyone lodges single touch payroll right now, which means the ATO already knows who you are paying. Like, they know who you're paying. So it is really difficult to go and backdate somebody to be before the 1st of March. If they weren't eligible based on those criteria, then they are not going to qualify. They also must be 16. So there's been a lot of people who are apparently trying to backdate their young children to be employees of their companies and businesses. And again, that's going to be a recipe for disaster. So we are advising people, no, don't even try it. All right. So let's assume, point one, you have had 30% decline in turnover, tick, we qualify, and that you have employees who are eligible, i.e. full-time or part-time, and they were employed at the 1st of March, and or casual, and they've been with you for more than 12 months. So they're the first two things that we actually need to worry about. That then says you are now eligible for JobKeeper. There's a couple of other administration things that you need to do, and one of them is to ensure that your employee actually nominates your business to be their primary employer from a JobKeeper perspective. So there is a form, and luckily this is the form that came out literally 40 minutes before we started this webinar. There is now a nomination form that the ATO has put out that we'll be sending around after this, that you can give to all of your employees, whereby they can nominate you as their JobKeeper employer. Now, this is actually going to be a requirement that we need to notify the ATO that you actually have asked the employee if you are their primary employer, and therefore if they're going to be in your pool of people. The other thing to be mindful of is that every single employee, therefore, who does accept that you are their eligible employer or their primary employer, has to be paid JobKeeper. So that means that they all need to be paid a minimum of $750 a week before tax, so that's gross, or $1,500 per fortnight before tax, again, gross. Now, the really interesting component of this is not a handout from the government for employees sitting on their asses doing nothing, okay? This is about keeping the employee engaged in working with the employer. So never before have employers had as many rights with Fair Work, like never before. So it is quite amazing to have a look at your rights. But basically, you can ask any of your employees to work the number of hours that would ordinarily be required to work in order for them to be paid $750 per week. So if you're a business where your employees are working as normal, so they're just turning up to work every day and working their normal hours, you just pay them as normal. So just pay them as normal, with one caveat, that anyone who ordinarily didn't earn $750 a week, you need to give them a pay rise to earn $750 a week. If your business has completely shut down and you have nothing at all that your employees can do, then you've just got to pay them $750 a week gross, less tax, and the ATO will reimburse you at the end of the month. For those of you who are doing like a hybrid approach, where your business might be open for a few hours, or you might be able to do some work from home stuff, you can actually ask your employee, and they cannot refuse to do the hours that they're required to do in order to meet that $750 payment. So there's been a lot of questions, I guess, from employees about, I don't have to work, which is just, sorry for my swearing, but a load of bullshit. This is not Centrelink, okay? You are not the government providing Centrelink payments. This is about keeping your employees engaged with your business and doing the work that you as a business need to have done in order to come out the other side of this mayhem period in a really good shape for your business. So that was my summary. Now let's get to...
There's a lot of questions, guys. So I'll try and keep these pretty brief and to the point because I'm conscious of your time. Is there any clarity yet around JobKeeper and annual leave entitlements?
So, yes, there is. You can decrease or use up an employee's annual leave entitlements as part of that $750 payment as long as they have more than 2 weeks of annual leave left at the end of that pay period, be that weekly or fortnightly. So a quick example, if an employee had 4 weeks annual leave as of today, and you weren't getting them to do any work in the business whatsoever, you can effectively get them to use that 2 weeks worth of annual leave, and you can still be paid the JobKeeper payments. Now, you could get them to use that leave over 4 weeks if they were normally getting paid $1,500. We'll keep my math simple, $1,500 in a fortnight, or sorry, in a week. So you could spread that over 4 weeks, which then means they'd be getting $750 a week, and they'd be using half of their leave. So the issue with either annual leave and or the hours that you make them work is when you do the number of hours multiplied by their normal hourly rate, it has to be their normal hourly rate. You can't all of a sudden get somebody to work for $10 per hour when they ordinarily earn $25 per hour and tell them that they need to do all of these hours to earn their $750. So you can get them to use annual leave to reduce those entitlements, but they still need to have 2 weeks annual leave left at the end.
Excellent. There's a couple of questions around the calculation. So, hi gang, my interpretation of the eligibility of a business is 30% less than similar BAS GST reported income from same period last year. Is that correct?
So yes, you could do it based on a quarter if you're doing a quarterly BAS on a cash basis, or you could do it based on a month, or you could do it based on a month in the future. You can do it based on cash and accruals. So we kind of get, as I said, 18 different calculations for whether or not you're going to be eligible based on the 30% decline in turnover.
Okay. I've got a question that says, how about a pay-as-you-go large withholder? They don't submit any activity statement with pay-as-you-go withholding. Are they eligible for it as well?
If they pass the other tests, yes. That's more of a how is the ATO going to monitor that? And I actually don't know is the answer to that question, because we don't have any guidance based on people who aren't doing STP. For all of our small business clients, everyone's doing STP.
Yeah. Correct. If a shareholder receives the JobKeeper payment, is this paid through STP? If it is, will it increase an entitlement to the cash flow boosts?
No. So the cash flow boosts are definitely not going to be part of the JobKeeper extra payments. So one of the big kick-ups from industry bodies was that if you're a trust, if you operate as a trust and you don't actually pay wages, you just pay trust distributions at the end of the year, you are not entitled to the cash flow boost, and you will definitely not be entitled to the cash flow boost. The new stuff under JobKeeper is that you may nominate one partner in a partnership, one adult beneficiary of a trust, or one shareholder or one director in a company to be the people who are eligible for JobKeeper. Now, effectively, that is going to be paid in exactly the same way as what sole traders are going to be paid, in which case you do a declaration to the ATO, you nominate that person, and that person is physically going to receive the money, not the actual trust or partnership or anything else. So it'll be very similar to a sole trader in that example.
Which was one of the next questions. How does one partner get it and the other one doesn't? And how do you determine?
Oh, well.
Rock, paper, scissors.
Yes, rock, paper, scissors is definitely the answer, because you literally just have to decide between those partners and or trust and or anything else.
Okay. We've been through it, but it's probably a good chance just to recap. JobKeeper, how do you calculate employer eligibility? Is it only year on year, or is it possible to do quarter on quarter?
Yeah, so you can do quarter on quarter, or you can do year on year. So March 19 versus March 20, or April to June as a quarter, or July to September as a quarter. Interestingly, you can't do January to March as a quarter. So it's only from the 1st of April to the 30th of June. And I guess on that note, you can also do a projection. So if you're quite clear and confident on what invoices you're going to do for customers in a month, as an example. So right now we're partway through April. If you're very confident on what invoices you're going to send to a client for the rest of the month, or different clients, you can actually do a projection and qualify based on that projection, as long as you can substantiate how you did those calculations. So if you're a hairdresser, as an example, and you have shut your salon all bar 2 days a week, and you used to trade 5 days a week, and it's pretty easy for you to do a projection to say, my business is going to be down more than 30%, therefore I'm going to qualify. It is important to note, though, you still have to lodge your actuals at the end of the month. But at least in this example, you can say, tick, we do qualify.
Excellent. JobKeeper question. If you were working part-time at one job, and this business qualifies for JobKeeper, and then you start another job as well as working casual, do you lose the right to JobKeeper at the part-time employer?
No. So you have to nominate as an employee one employer, and has to be your primary employer to receive JobKeeper payments from. So as long as you're still employed by that business, then you will get paid by that business.
Okay, here's one where someone's changed their trading structure. So are businesses entitled to JobKeeper if they change structure, e.g. went from a sole trader to a company, and the company has not been in operation for 12 months? The business can show 30% reduction over the similar period, but the similar period was as a sole trader.
Yeah, so if you aren't a business that's 12 months old at this point in time, you're allowed to use another comparable period. And this is where the commissioner actually has discretion, but we need to basically be applying to the commissioner to say, we are an anomaly, we are an outlying business. Here is the premise that we want to actually do this application on. You can see my last 5 months of trading, as an example, have been at these figures, and you can see that I'm now at a 50% figure, and the commissioner will end up saying yes, but you just have to document all of that downturn of why and what's happening, because there's a lot of businesses that haven't been open for 12 months basically, and we just have to be able to show a definitive downturn.
Here's someone that's been reading some fact sheets. I have a question, read JobKeeper and casuals. I have an employee that works for me in all of the school holidays and infrequently on school term weekends. Their last shift was on the 20th of February. So she worked 3 or 4 shifts through December and January, and then nothing till the 20th of February, and hasn't worked since. Will she qualify for JobKeeper based on the definition as being regular and on a systematic basis?
So if you could prove for last year, as an example, that it was definitely systematic, and the year before, as an example, that was systematic as well, as in regularly worked all of these same time periods all the way through, you would definitely qualify. This is another component where a question has actually been asked of the ATO, and they have answered it as they do with everything. We're not sure on how that will apply. We'll get back to you when we do actually know the answer to that question. But again, if at that point in time the employee was shown to be working for you over a number of years, you would easily be able to substantiate and argue that there is a pattern, and that they are part of this regular thing. Today, Taxpayers Australia Group basically sent through and said, a systematic basis, does that also mean that they're still engaged in all of the different systems and processes that we do in our business. So as an example, we at Growthwise use Slack. So if a casual employee was still part of our Slack communication groups, that definitively shows that they are still part of our employee, so still part of our group, and therefore that would qualify. So if you can show that they kind of have ties to your business still, and that the pattern of when they work for you is very consistent, they would qualify, assuming all the other rules, etc.
Okay. Just conscious of people's time, given that we've just clicked over to 6 o'clock, there's still a hell of a lot of questions coming in, so we will keep going, but we'll also come back to people that don't get a direct answer after this session. So we will come back to you. How about if turnover in March was down 26.99%? I like the fact you know that. That is awesome. However, now April will be down 95%, which is going to be common.
Yeah. So you qualify based on either March or April. So you don't have to qualify for March and then qualify for April. And the interesting thing is this is only starting from the 30th of March. So the rules at the moment is you need to tell the commissioner when you qualify, and you tell the commissioner and you will qualify in that fortnightly period. There is one caveat to that. You can't tell the commissioner at the moment. So how exciting, which means the commissioner is giving everyone until the 26th of April to tell them that you are actually eligible to receive JobKeeper payments. Now, you cannot do any of these applications at this present point in time. Nothing is available until Monday, the 20th. We'll be doing everybody's applications on that Monday, Tuesday, and Wednesday. We are ready to go with all of them, but we physically cannot do anything because the ATO is not ready. And I guarantee you 100% all their shit will crash on Monday, which is why they're giving everybody until the 26th. As long as you've told the commissioner by the 26th of April that your business is eligible for JobKeeper, and remember you're allowed to project, so if you know what the last couple of days of April's income going to be, you can say tick, we qualify for the 30% if you didn't qualify for March. And you've paid your employees $750 from the 30th of March all the way through to the 26th of April and beyond, then the commissioner will back pay you for the whole month of April. All right. So you're basically saying to him, in April, I qualify based on either March and or April's turnover. Here are all of my eligible employees. I've paid them all $750 a week less tax. Give me back my money. And then the commissioner will give you back your money. In theory, that's supposed to be the first week in May.
Yeah.
Let's see.
People that were on a full-time contract but in their probation period on the 1st of March, will they qualify for JobKeeper?
Most definitely. The ATO doesn't care if they were probation or not. They just care that they were an employee on the 1st of March and not a casual who'd just been hired. So.
Excellent. What if I hired the team member in February? There is a signed employment contract and they commenced on the 16th of March 2020. We started meetings in January with this team member and they resigned from their other role in February.
So that's a question that needs to go to the commissioner because that would need to be assessed to say yes or no. Technically, the ATO are actually using the date as it stands on the date of their tax file number declaration of when they started work. So that to me would probably be the 16th of March. But again, you'd need to do an application for that one employee.
Read JobKeeper. What happens if you are an expanding business, either a startup or a scale up, where the previous year's income was much less, but you still had a 30% plus decrease from the recent or previous months? The loss of recent income is making it hard to keep all of the current employees.
So that's where we go to the commissioner for commissioner's discretion, because they have said outright that startups, people who have purchased a business during the year, or perhaps even somebody who only just started their business at this time last year, they would take another test. But again, we need to be able to show them that our comparison is for the last couple of months versus this month as a downturn. If we can show that, there won't be any issue at all. If we can't show that, then they'll definitely be saying no.
Okay. I have one employee who could nominate us as their main job. Is she better off going on unemployment benefit as a mum with a child under 18, or better off getting JobKeeper so we can keep her on?
That all depends on if you want to actually keep her on as an employee. This is not designed to be something that is, where do I get the most money from? This is, who do I want in my employee later on? From a business perspective, if you want that person still engaged in your business and working for you, then they should be on JobKeeper. If not, they should be fired and be on Centrelink.
Question re super guarantee. Is that payable on non-working on JobKeeper hours?
No. So you only pay superannuation on the hours that the employee works, or that they're taking annual leave. So that's still the case, not on any top-up payments that you're giving them to get to the $750.
Excellent. This is a common question coming through at the moment, is what happens to sole traders in respect of JobKeeper?
So similar to what happens with everybody else, we need to do an application to the ATO to determine eligibility. If you pass that eligibility, you will nominate the sole trader, and the ATO will pay that sole trader's personal bank account. So it's actually linked to your tax file number for sole traders, not your ABN. But similar scenario, obviously you don't have to pay yourself the $750, but the ATO will pay you at the end of the month.
Okay. A JobKeeper question. With the alternate test for a seasonal business, what is required as evidence? E.g., a tree grower like the beautiful ones behind you had no income in March last year, has some income in March this year due to setting up an additional part of the business. Turnover will drop well over 30% in seasonal period around July. So I think this is around the seasonality of income.
Yeah, so you can compare 2018 to 2020 if that would actually give you a more accurate figure for seasonality, especially around farming has been the example used most often. But again, it would just be about being able to show from an income perspective on a profit and loss a pattern, and then a pattern of downturn. It may be the case that you don't qualify now if you can't show that pattern, but if you're going to qualify in July, then payments would start from July. And remember, the Commissioner hasn't actually released any information other than what went through the Treasury documents. So you're going to see hundreds and hundreds of examples coming out for those fringe cases from the Commissioner in the next couple of weeks.
I agree. We pay annually our pay-as-you-go. How will they determine our eligibility?
The ATO don't know, is the answer.
Apply.
Single touch payroll will fix most of those issues. But we've had a discussion with Xero this afternoon as an example, and they still don't even know how they're going to put half of these into their system because they're still waiting for information from the ATO. So what a time to be a small business owner.
Okay, so if I had an employee that only works 19 and a half hours, that's very specific, and earns under $750 a week as a permanent part-time employee, how should I approach them to work more hours to get the difference, or do we still need to pay the $750 and split it between the normal hours and pay the difference under the JobKeeper?
So you can ask the employee to work more. In this example, if their normal hours are 19 and a half, they could probably refuse. And if Fair Work got involved, then Fair Work would probably say, okay. We have a lot of people in this scenario who've just actually reached out to the employees and said, look, we require you to work these extra hours. That has resulted in some screaming matches, some people being called very terrible insults as names. And clearly I'm not a HR person or ever would be allowed to be a HR person. But this is supposed to be about employers and employees working together so that the business is still around paying their wages at the end. I'd be asking the employee, even if you split the hours with them, and if the answer is no and they carry on, then I'd be saying you're fired. Clearly not a HR person though.
Fired, just like Trump. What if a doctor is operating through a company but it's all PSI income?
Then it depends on how you've normally been paying that. If you've been paying that out as wages at the end of the year, then that's fine. If you haven't been paying that out as actual wages, then they're not going to be eligible for cash flow boost. And changing anybody's kind of how you pay them will definitely be frowned upon by the ATO at the moment.
What happens if you pay your apprentice the $750 gross a week, which is more than their normal wage, and then you don't meet the 30% downturn? I suppose the follow-up to that is, can we pay them less?
No, you can't pay them less if you want everybody eligible for JobKeeper, but you should make sure that you're eligible first before you make those payments, would be my advice.
How does JobKeeper work for an employee that is on maternity leave at the moment? Are they technically eligible?
No, if they're on maternity leave where they're getting paid from the government. So if they're getting government maternity leave, then the answer is no, even if you're the one physically paying it. So even if Centrelink pays you and you're passing it on to the employee, then they are definitely not eligible.
Okay. Regarding the JobKeeper and demonstrating the 30% revenue loss, do you include WIP in your revenue calculation?
No, invoice only.
Beautiful. Once the business qualifies, do you need to re-qualify each month until the end of the program?
What a great question, Michael. The answer is you have to report to the ATO your projected and your actual income every single month. And we're still waiting for them to answer us on when that means your payments will stop versus when your payments won't stop. So effectively what we're assuming is as soon as your income doesn't meet that threshold, your payments will cease. But again, we still have no guidelines or guidance around that. Okay.
With regards to JobKeeper, if we use casuals infrequently, but over the 12 months we paid, they may earn 12,000, say, usually not over their maximum amount to impact their pensions. How would JobKeeper work for them? We haven't been able to employ them since the downturn.
So if they are a casual who meets all of the criteria for a casual, so frequent, etc., they still have to nominate to be a JobKeeper employee. So they can choose not to, because this is taxable income to them and will most definitely affect their pension. And if they are going to be part of a JobKeeper employee, then you need to pay them $750 a week. So it will have a big impact on their pension. They obviously need their own individual advice, but that would more than likely be that they're not going to be a JobKeeper employee.
Okay. So if you qualify in March, but then happen to not qualify April, May or June, you qualify, or is it reviewed each month?
So you'll qualify for April, but then you'll need to forward project every single other month, and we'll come back to you once the ATO actually answers us as well.
Is it worth shutting my business 2 days per week to qualify for JobKeeper? Would that make us eligible? We are working so hard to keep going, but if I didn't have to, it would be nice to slow down.
Well, first of all, I'm not sure the people of Newcastle will let you slow down and shut at all, but good try.
Stop posting delicious things on Instagram.
So the answer is yes, you could most certainly look to do that. But you also need to weigh up the fact of, are you actually making more money in the days that you're open versus the days that you would ordinarily be closing? So it's a really fine line in terms of eligibility and then what that physically does for your business long term as well.
Okay. How will the process work if a company doesn't initially qualify for JobKeeper, but it does in, say, July or August?
So you would register in July or August, whenever that is, and the payments will be made for that month. So for July and for August, but they wouldn't be backdated. So it's basically as soon as you are eligible, you're eligible and payments start in that fortnight and month, but you don't get to back qualify, if that makes sense.
It does to me. Where do we find the documents which need to be completed and lodged for job seeker?
No idea. We're not Centrelink experts. It's been hard enough to keep up with JobKeeper legislation. I think job seeker stuff is just done all via Centrelink, as far as I'm
I'll
aware.
chime in. You can initiate that process through your MyGov app if you're already registered with Centrelink. So there is an updated part of the MyGov app where you can go into that. We need some more clarification on the super payment. So if they work a lot less than usual, we only pay super on the hours they work.
Yeah, so if they work 2 hours, as an example, you only pay super on those 2 hours and not the additional amount that is a JobKeeper top up. So what is coming to zero? Who knows? But anyway, what is coming to zero is a new allowance category that the ATO have requested to show the difference between normal ordinary hours or annual leave that an employee has worked or taken, where you should be actually doing the superannuation on, versus your top-up amount, which is just the JobKeeper payment. And so once that actually comes into zero, we'll be amending everybody's pay runs for the period that they qualify up until when that goes, so that we've got the right stuff lodging with single touch payroll. So yeah, that is definitely coming, but you only need to pay super on their ordinary hours. So we've basically are setting up a standard which says your first thing in payroll will be the actual ordinary hours that they've worked multiplied by their hourly rate. The next line will be any annual leave hours that they've taken or sick leave multiplied by their normal hourly rate. The third line in a pay template will be the ordinary hours that they normally work multiplied by a $0 pay rate. And the reason that we're doing this is in normal stand down provisions, if your employee works 40 hours per week normally, and you're getting them to work 20 hours per week, they still have to accrue annual leave and sick leave based on 40 normal hours per week. All right. So that's why we need to have that third line, and we'll give you really detailed, clear instructions. And then the fourth line will be the number of hours that the employee has done under JobKeeper multiplied by their normal hourly rate, which is effectively going to give you the free hours that they've been paid for that they haven't worked. And so that will be an allowance. It'll go to the ATO in a certain format. And that'll be fine. And so if you've already filed a pay run, that is fine, because you physically can't do it correctly at the moment anyway. So we will fix them for everyone.
And so people are just asking where the documents are located for them to lodge for JobKeeper. As we said earlier on in the session, we'll be sending out to all of the guys that have listened in this afternoon a follow-up email with just everything that we've covered today, including the useful links that we've found this information from.
And we're doing all the applications, right, for every single one of our clients, because we know that it is very vital and important to get this right now. If you do something incorrect now, there will be zero eligibility. So please do not press any links from the ATO. Please do not do anything with the ATO whatsoever. We will take care of everything, as I said, between Monday the 20th and that Wednesday the 22nd, so that we get all of that eligibility done, and therefore we'll be doing the reporting on a monthly basis for a turnover perspective as well.
Excellent. I left one for the last. Is there anything else we are eligible for or recommend that we do?
Oh, yes. There's a lot of other things that are coming now. So payroll tax for most people is a big thing. I know not everybody pays payroll tax. New South Wales are basically doing 25% reduction of your payroll tax bill. Victoria are amazing and have just wiped your payroll tax bill. Western Australia is giving people money, like actual money, if they have payroll tax bills normally, which is fantastic.
Stay there.
But yes, I'll stay in Western Australia. But there's also some other little grants and things that are coming out, and a lot of these things are only just starting to come out as applications now. So there are currently $10,000 business grants in New South Wales for businesses that have been forced to shut down. So they're really looking for, accommodation, arts, rental and hiring style businesses, lots of entertainment-based things. You'll basically be getting $10,000 to pay for things like your rent, occupancy, utilities, all of those types of things. None of those application forms are out yet. They should all be out by this time next week. So we've been keeping an eye on everything and kind of just marking down who should qualify for what. And we'll make sure we're liaising with you and sending the links for the things that we can't do the applications for. If we can do an application, you won't have to stress. We'll have done it for you so that we'll just tell you money is coming into your bank account. How exciting. Which will be good. And so, yeah. And so there'll be a lot of other grants we suspect coming out in the next 6 months. So I know a lot of you have met Karina in the office, and she is literally trolling every single website known to mankind daily, and has a beautiful little spreadsheet of not only the federal and the state grants that are out as well, but other little things like Facebook announced some different grants that they're looking at and stuff. So if you get a random reach out from Karina saying we need to apply for this grant, get straight on it.
Excellent. An earlier question was, will it be backdated? If so, what date? I believe for all of these things, anything that we've needed to register for, we're doing on behalf of our clients, and it's backdated to the original start date of the legislation. So you don't need to worry about anything for that. And do we collect our employee nomination forms and forward them to Growthwise?
Yes, but at the moment we're going to hold off on that because we have asked Xero if they are going to be able to do something with the nomination forms, and I hope to have an answer by tomorrow for that. If not, then obviously the nomination forms, we will just be sending the link to everybody and saying, please get your employees to fill this in. But I'm hoping that Xero is going to have something that streamlines that process and makes it a little bit easier, because a PDF editable form from the ATO is probably not going to be what employees want to be doing.
Oh well. Too bad. Okay, I haven't got any other questions.
Yes, Amanda, I know. Updated employee data in Xero would be amazing as well.
Wouldn't it? I'm right behind you, Amanda. Go for it.
We have a sneaking suspicion that so many people's addresses are even going to be wrong based on what employers have, and so filling out these documents will bring a whole host of additional information to light as well.
Excellent. All right. Well, we don't have any more questions coming through, so unless anyone wants to send through quickly one more question before we wrap it up, we'll let people go and enjoy the rest of their evening.
And if for those of you who would like to understand how hilarious our life is at the moment, we're obviously stuck in Western Australia and we're on an olive farm. And so I don't know if you can see, but they're my olive trees that I get to wake up to every single morning. And so the request that we had earlier today was to be able to laugh at our current living circumstances. So we are in a camp trailer. And if no one has any questions, feel free to jump off now if you would like to. Thank you, everyone. We'll send you the recording. But if you would like to laugh, this is my camp chair that I sit in. This is the forest. at the end of our little space where we've parked our camper van.
Decent.
These are our olive trees, and at the moment there's really not that many olives, so it's a little bit of a problem at the moment. But the hilarious thing is I can actually hear the farmer coming up now on his quad bike, and we're very lucky, so you don't have to worry. We don't need to leave the farm at all. We can buy produce from the farmer. So last night we had a beautiful sous vide piece of beef. Tonight I believe I'm getting a barbecue marinated pork steak for dinner with fruit and vegetables that have come from the farm across the road. So we're getting very spoiled and we're very lucky with where we are, which is fantastic. But for those of you who do want to have a look at our wild setup and process, Bo has a YouTube channel and we will send you our...
Di wants you to stay. She's leaving off to help show you how to pick olives.
Well, let me just explain that our camper trailer only has a bed inside. Our kitchen is still outside. Our shower is cold and our shower is an outdoor shower. And it's starting to get a little bit cool. So 19 degrees today. I'm really not looking forward to going and having my shower outside in the next couple of hours. But we will send you around a link to show our fortunate or unfortunate living conditions at the moment. So you can all either be jealous of not being able to be in a beautiful place like this, or not jealous because you actually can have a warm shower and go to the toilet inside. So
oh, look, there's the dog in the background.
And then here comes the dog.
I miss that. I miss Bossy.
Here comes the dog and Bo, who have been actually listening to this webinar as well, but just going for a little bit of a walk. So we'll sign off for now. We have another big blog post that will have this recording in it, and we'll also recap everything that we've sent out over the last kind of couple of weeks. We'll be back in touch with everybody on Monday, if not before Monday, as we start to do those applications. We'll make sure everyone understands what has to happen in Xero, and don't forget, we'll fix up the issues for you. And everyone should have their cash flow boost information out to them by the end of this week, I would say.
Excellent.
If you have any other questions though, guys, just make sure you keep sending them through. If other things change and we get more updates, we'll probably do another big open session like this as well. But again, we do have a really, really big document that we've been compiling with examples and so forth. And so if that doesn't come out to you tonight, it'll be first thing in the morning.
Bye, everybody.
All right, team. Enjoy dinner. Hopefully it'll be something yummy, but I'm pretty sure it won't be as good as my barbecue marinated pork steaks and fresh vegetables.
Bye, everybody.
Bye, guys.